All right, fellow traders. Long time no see. I said I wasn't going to do a lot of these videos, but you guys are forcing me to at least express what I'm seeing here on the E-mini dealing with order flow. One thing, a couple things I'm going to talk about is, let me get one thing out the way. Reason why I'm trying to do too many things at one time. I have a Baccarat channel, and it's called the Baccarat Edge. Those guys are patiently waiting for a video that I owed them a month ago. I got to get on my P's and Q's here, ladies and gentlemen. But if you're interested in seeing my take on the game of Baccarat, I figured out a way to do some charting with Baccarat. It's not the usual way, but if you want to check out how I play Baccarat, check out YouTube channel, The Baccarat Edge. Now, let's get to the meat of this. I was in, I think I'm going to cut I'll leave it on for right now. I got live trading or live quotes coming in while I'm looking at charts. I was, first, I got so many thoughts going through my mind. Let me tell you what I do here. I use OrderFlow print chart, which is sold. I use the Mike Valtos version. There's so much to see in the Mike Valtos version. So much to see, it's not funny. I have looked at several OrderFlow print charts, and this is by far, in my mind, the best OrderFlow print chart that you can get. It's showing you everything. What you have to do, and what you have to be patient enough to do, is it shows you so much. It shows you so much. You have to go through the signals and decide what you're going to use and what you're not going to use. Okay? Now, with that being said, I use the OrderFlow, Mike Valtos version, the OrderFlow print chart with polarity, reversal strength bands. My settings are 60-40. 60 for the top band, 40 for the bottom band. Okay? So I am trading strictly on location. And this is the hard part about trading, is you have to be patient enough to wait for those signals to come. I've been into OrderFlow probably for about I've been in the brokerage business. I used to work at a trade desk in Chicago, and that was experience enough. Wow. All I can say is, wow, what a ride. But after I left the trade desk, and what I was doing at the brokerage firm was we were system trading for people. And, everybody comes out with a system, and they think the system is the key, the it to it all, until it goes real time. That's another story. But anyway, looking at order flow, I think one of the keys to, and that was back in the mid 1990s going into 2000, I was at the brokerage firm. So that lets you know, that gives you an idea of how long I've been looking at charts and so forth. I'm more so into looking at charts than working at a trade desk. Back to my thought. Order flow is about location. You just don't push the button because you have a signal. I was in one of the training webinars with Mike Valtos the other night. And what caught my attention was a guy said he had gotten in on a trade. He had gotten in on a trade. Where is that trade? Bear with me for a second, because I wanted to talk about this. And, you know, just because you see or you're getting signals on OrderFlow does not mean you take the signal. You have to have location. Okay, now I'm gonna have to cut it off because it's just noise is disturbing. You have to have location. And if you don't have location, even though you have a signal, and this is in my opinion, because everybody trades OrderFlow differently. There are so many setups in OrderFlow. It ain't funny. Everybody has their own personal setup that they like. I have several setups that I use. Several. And this comes from just, you know, going through videos on the internet and studying the charts. This is not a red light, green light system. And one thing that helped me when I realized what the polarity bands were giving me a better location than I was using for something else. Well, I was using something else for location, and you know, I was using market structure and stuff, but I still felt that I was missing something. So, with that being said, location is very important. There's a trade on, let's see, the 15th. Let me see if I got that many days loaded back on my chart. Now I'm gonna load up a couple more days on my chart. There are some days on my go back 4 days. There are some days or some location, not days, but there are some locations on my chart. And there was a guy who was in the webinar who was talking about, well, I took this trade because I got a signal. And Mike was trying to explain to him. Mike was a little, he was a little suspect about the trade too. He said, yeah, I probably would have took the trade, but a lot of times you don't know, or you can't, when you're in OrderFlow, you have to, you can't go back and say, I would have taken this trade, I would have taken that trade, I would have taken, it's almost like you can't do that, not unless you're recording what your bias is for that day. Okay? I'm gonna go back to this trade on the 15th. Let's see if I can go back to the 15th. Because this is a trade I wouldn't have taken because of location. This is the 15th. Yes, it is. Okay. He said the trade was at my time, it would have been 11:47. Let's see what happens here. Oh, yep, this is it. 11:47. Okay. 11:47. And if I'm not mistaken, he was looking at a minute chart. And I went up and looked at a minute chart on that particular day. Let me see if I can pick that trade out on a minute chart. 15th. Okay. 11:47 minute chart. I have to go back on days on this too. Bear with me. Bear with me, people. I just, he took the trade, and I think a lot of people don't understand sometimes, well, all the time for me. If the location is not there, I will not take the trade, because when you choose your location, the probability of your trade being that much more of success is high. Do you want me to repeat myself again? When you choose the location, if you have good location, the probability of success of that trade is that much high. You have to have the right location. You have to have the right location. 1 minute. Bear with me for a second. Charts is moving kind of slow here. Man, do I need to reset my days so the days can load? There we go. So on the 15th of November, he was actually looking at a 30-second chart, and the time was 11:47. So now you have to go from 1 minute to a 30-second. Where are my bars at? You know what? Let me cut the real time back on, because just to load these bars up. And that particular location that he has selected would have not been a trade for me. I wouldn't have done it. I wouldn't have done it. It wasn't extreme enough for me. And when I say extreme, you guys, a lot of you guys, once you see this video, certain things are going to start clicking. Because, I've been looking at OrderFlow, and I've had a couple of OrderFlow programs, and I just wasn't getting it. I wasn't understanding, about location, and I just wasn't putting it all together quite yet. It's so much. It's already enough work where you got to sit there and look at the delta numbers, and look at the min, look at the max, look at the volume, and as we move along into the future, we're starting to see a lot of programs come out, because to be honest, 25, 30 years ago, you wasn't able to see the kind of stuff that you're seeing on charts now. You were not able to see. It wasn't happening. So let this chart finish loading up. So got a partner of mine who has always used the Bollinger Bands. He's a fan of the Bollinger Bands. And he stresses the point, man, you got to get location. You got to get location. I wasn't hearing it. I was not hearing it. Shout out to Mr. Magic. And it just, all of a sudden, it clicked on me. I'm going to start using location. Once I started using location, once you get your trades down, the first thing you have to do is you have to get your trades down. You have to decide what trades you're going to take, what signals you're going to take for certain things on a chart. You're going to have to decide. You're going to have to decide what you're going to use to get in and out of the market. What signals you're going to use? You're going to use, Mike Valtos has so many signals popping on this chart. And everybody, I've even read, not heard, but I've read a couple people on the internet saying, hey, he's got too much on it. He's got too many signals on his chart. No. What you do is you load up a blank chart. I'm getting ready to drop something on you guys. Load up a blank chart, because this is where the homework comes in. You load up a blank chart. once you load up a blank chart, if you own or if you're using Mike Valto's OrderFlow, you uncheck everything. And when I say everything, you uncheck everything in that OrderFlow thing except the statistics down at the bottom. I'm telling you guys what I did. I was in a Discord room and somebody said something and I said, hey, they were talking about loading this up and loading that up and, loading all kinds of indicators up. No. And I said, hey, just load up a OrderFlow print chart and start becoming familiar with what those numbers are doing. Take it slow. And the first response I got was, well, OrderFlow is not a print chart. Or it's not a chart. OrderFlow print is not a chart. I immediately logged out of that Discord. I don't have time for that shit. Don't have time for it. But anyway, that's how inexperienced they were. They there's a saying, why convince a baby to walk when he's not even crawling yet? Trying to teach him to walk is irrelevant. Don't even waste your time. And I was, dropping some gems on them. And the guy who was running the Discord was swearing I was trying to sell something. I wasn't trying to sell anything. I'm telling you how I went about learning OrderFlow. I took everything off the chart except the numbers. I took the ratios. I took the trap traders. I took everything off my chart. And I started looking at those charts naked. All I wanted to see was the bid-ask numbers, the double tops, the double bottoms, and you start to become familiar with it that way. Okay. This trade, this guy pulled off. Now I have to go to 30-second. This trade this guy pulled off, he went short and he didn't understand why he got stopped out. And I think one of the main reasons, to me, was because location. Wasn't nothing wrong with the trade, but if you don't have the right location, your trade might not, I'm going to say, move as fast or go as fast as you think it should. Might not move like you want because maybe the location, the signal wasn't wrong. It's location. Location, location, location. Here we are on a 30-second chart. And I'm going to tell you how I would have proceeded to take this trade if I was taking this trade. Of course, hindsight is 20/20. Everybody always has a way they would have done it. Shoulda, coulda, woulda. But things, happen for a reason. And I just didn't think the location. Here's the trade he took. Here's the trade he took right here. After that bar right there, that's the trade he took. Shorten that up a little bit. Kind of a big arrow there. He took that right there, and he took a short trade, and he didn't understand. And I think he got stopped out, but he didn't understand. It just meandered and went to the side. It just started trading sideways at that point. My first response, and I couldn't respond. Of course, I'm in learning class just like he is, but I just saw something. You know, sometimes people are going to see something that you don't see. And I just saw something that he didn't see. I don't think he quite understands location yet. Just because you're getting arrows on your chart does not mean you take the trade. And Mike was like, I might have taken that trade. I could have taken that trade, blah, 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 blah. Mike was, a little up in the air about it too. But my thing is, here is where the help with the polarity bands come in handy. The polarity bands are there for overbought and oversold conditions, along with order flow. I'm dropping some gems on you guys. Pay attention, because this is what I've learned so far. The polarity bands are there for overbought and oversold. And the first thing that you have to understand is, at the beginning of the day, do you know what I do at the beginning of the day? Here's a chart for today. Okay? Now, this particular chart right here is a daily E-mini. I draw my channels, and let's look at the 15th, by the way. 15th was an up day. 15th was an up day. 15th, it looked like a hangman, but that was an up day. So my bias for the day would have been to only take long trades. I usually trade in direction of the daily. When I see a pullback, my ears go up and I start looking for a trade in the direction of the daily. We're doji here. We're on an inside day today. Inside days are very hard to trade. I did pull a trade off today. I'll show that to you all in a little bit. But what happens is, he took a short trade on an up day. And Mike doesn't push that much. Well, he hasn't gotten to it yet, but Mike doesn't do that. Has not done a session on location yet. But to me, my personal view of it is, if you don't have location, that trade might not be as successful as you think you want it to be. This is not a red light, green light system. You see green light, you go, red light, you stop. Trade in direction of your bias. Whatever you might be using. I use the daily E-mini. The 15th was an up day. That you can see that bar closed up for the day, and it was probably much higher than that during the intraday, but we're looking at a daily. And I've thought about changing this to a 4-hour, which I probably will. Probably it'll help me more with my timing. But this trade right here, he took a short trade and did not understand why he took that short trade, or why he lost that short trade. The bias is up and you're not over the bands. And let me tell you, if this was up here, I might have would roll with you a little bit on that. But this bar is in the middle of these bands. And let me tell you now, there's nothing wrong with taking trades in the middle of the band, but I'm not a fan of it. And look what you got. Look what you have following. You got plus 213. You got some negatives here. You got a minus 472 back here. And then it comes to the plus side. Then you got a minus 398 here on that bar. That's not enough for a flip to me. I got alerts set. That's another video. I have set some alerts on my chart. And I have alerts set according to the mins and the max. That's another video. But I like to see those numbers do certain things before I take a trade. This particular bar right here is not overbought enough for me to want to get into that trade. There are better trades out there. Those were exact words that were going through my mind when he was explaining this to Mike in the webinar the other night. To me, there's better trades out there. You're going to catch them. And you're trading a 30-second. Too big for me. Stops would have been too big for me. I trade a 12R. I trade a 12 range chart. Okay? So this trade right here, it meandered because it wasn't extended enough. Let's go to the chart I look at. Now, let's see, do I have the 15th up on here? Oh, yeah. 1147, the 15th. Here is, on that same trade, here is where I was on that. Right around in here. It's not extended. It's not extended on that over bought band, that polarity reversal band. And when I'm looking at trades, as you can see here, I change my symbols. I have different symbols according to what I'm looking at. Like if you see these red balls here, that's price exhaustion. Okay. Of course, I have the imbalance box there. You see the ratios at the top and the bottom is in blue. I have below, and above with the hollow point arrows, which I'm using another indicator for that. I'm not going to get into that, but I got a way to flag that. There, you know, when I'm pulling a trade, I have to be overbought or oversold. Okay? With that being said, let's look at some overbought and oversold trades. Let's see if we can go back to today. Quarter load shot. I call it a load shot. Here's a trade I pulled today. This is a load shot. Let's see where I got in at. I didn't milk the trade like I was supposed to. I chickened out. I chickened out. First of all, as much as I bragged to my partner about this trade, and I said, man, if you see a load shot, take it. And I got it programmed as an alert. So here are my alerts: recovery bar, load shot, bounce, below bearish, above bearish. Another video. I'm not going to get into setting alerts, but you guys figure out how to set some alerts, because if you're not setting your alerts, and it's so much going on an order flow chart, you have to have alerts set, because there's no way you can watch all of this at one time. I prefer to pull manual trades because I control it a little better. And let me explain to you what I have on my chart. I have this black line you see is, if I pull a trade, I want to be able to attach my stop to it if I'm long. And this trade got out when it jerked down to almost hit my stop, I got out. And technically speaking, I'm usually a couple ticks below. This is a trigger line. This is part of another indicator set, but this is a trigger line. And this trigger line, you can attach your stop to this trigger line, where every time a new bar is made, the trigger line is following it. And as you see, when that trigger line is violated, right here, that trigger line didn't get violated to right here is where that trigger line got violated at. That's where you would have gotten stopped out. Oh, did I leave some money on the table? Boy, did I leave some money on the table. That's a 10-point run. Money management, that's another video. But I have issues when I start to see money on the table. I don't like to leave none left. I get when it starts to pull back, I start to get nervous. I need to lay on the couch just to figure out how I'm going to pull that trade. That's a psychological thing. I'll try to get over that. That's a 10-point run. But this particular trade, I call the load shot. The reason why I call it the load shot is because, see what this is. The reason why I call it the load shot is because it's an up bar. The bar is going up, but look at the delta, minus 1654. Look at the volume. The volume is 12,000. Changes. The volume is 12,000 and some change, 12,500. I call it shooting the load. The sellers have shot the load. If you see a minus 1654 and that bar closes up, bet the house. I didn't bet the house. I only got one contract. Should have been 3 or 4 contracts. You have to classify. I know I'm jumping all over the place, but you have to classify your ATM strategy according to the probability of your trades. Classify your ATM strategy according to the probability of your trades. But this trade right here, we're down, we're oversold. You got above, which means the POC is below the up bar. And you got a load shot. Minus 1654 and that bar closed up. I went to the market on that immediately. Got in at 56 and a quarter. Got out at 58 because I had a pullback. And I should have just minded my business because originally my stop is right here at the pivot until this trigger line switches over and I can start trailing by that. But if I'm only trading one lot, I usually only take about 12 or 15 ticks anyway. It's like a 1-to-1 trade. The 2 lots is where you get to anything more than 1 lot. When you start trading multiple lots, that's when you get to diversify and play with your ATM strategy. This right here, this trigger line, boom, boom, boom. Beautiful, beautiful trade. Beautiful trade. That was a load shot right there. What else did I take today? Here's a trade right here. This was below. Oversold. Got in at 61. Got out at 62 3/4. Did a scalp on that. 1 lot. Wasn't too sure about that trade. And when I'm not sure, I do 1 lot. But when I'm confident, you're supposed to do more than one contract, which I'm just trying to deal with right now. SMB, S as in Sam, M as in Mary, B as in boy. SMB Trading does a whole thing on that. You guys might want to check on. They have some pretty good videos on, and they also have a free webinar, which I said I was going to sign up into because you can always learn something from somebody. Always learn something from somebody. But OrderFlow is not something you're going to learn in a week or 2. I told you about that in my first couple of videos. I'm going to tell you that now. You're not going to learn in a week or 2. My bias today is to the downside. Or no, to the upside. Because the E-mini today was leaning, the daily was leaning to the upside. It's on the downside now, but when the market first opened, I had a slight green, so I was leaning more toward the upside than the downside. That's what made me take this trade. I was waiting for a pullback, got a signal, I got a ratio. This ratio is basically price exhaustion. Got a whole number that's price exhaustion. I got price exhaustion on this single print right here. One of my alerts going off. I got a price exhaustion on this single print right here and I got an imbalance box. I went from plus 286 and it closed on the max at 467. To me, that's a go. That's a go. And I'm using 12 tick bars. How many trades did I pull off today? Here's a trade right here. Three lot right here. I got ratio, price exhaustion, and I got a trap trader. Now, let me remind you, when you go through your order flow, your Mike Valto's print order flow, you can change those symbols, and they don't have to be arrows, because I want to be able to distinguish what looks like what. I want to know when I look down and I see a straight line going across, that's a trap trader. If I see a blue arrow, that's a ratio. If I see a green dot, that's price exhaustion. Went to the market of three lot right here, 71.25. Hit my first target at 73.25. I got a trailing stop, hit the last one, the next one at 73.5. And then I had what you call a runner, which instantly got stopped out at 74.5. Take your time. Take your time and understand what signals you want to take. You don't have to take all of those trades inside of the order flow. My thing is, I like to trade the edge. I was only looking for long trades today. Market is up 77 now. So yeah, I don't want to take any trade, and I was only looking at long trades today. So you're getting an idea of the kind of trades that I'm looking at. Here's another trade, a two lot. Wasn't feeling too confident about it, but I was below, and I said, you know what? I'm going to take this. The reason why I took it was because I went from minus 327, and it closed on the max at 765. Then I got one of the patterns, what you call above, the open and the close. The open and the close of the bar closed above the POC. And then right here, I got price exhaustion. That's why I wasn't feeling too, anything I'm not really feeling confident about, I will not take the max number of lots. But if I think it has a chance, I'll go one lot, I'll go two lots. And you see I took a two lot here. I was more confident in this trade of a three lot here. So you get the idea. The idea is you do not take any and every trade. What you want to do is you want to wait till you get overbought or oversold, and I use the polarity bands for that. Excellent tool. Excellent tool. I would rather trade manually than use the polarity and trade auto trade. I don't care if you are getting in quicker. I want to see exactly what's going on. You have to understand exactly why you're getting in a trade and what's going on. If you guys are looking for, something that's auto, I've been down that road before. I used to work at a brokerage firm, and brokerage firm is no longer in business now, and huge brokerage firm, and we ran a systems division. We ran systems inside of that division, and I've seen more systems come and go than you can shake a stick at. And I was not impressed with none of them, because at some point, you have, At some point, you have to manually take over the trade if you want to maximize that trade. You have to manually take over the trade. And I'm not an algo. When you start getting into algos and programming, that's another story. But if you're trading at home, you don't have the money to pay a programmer to algo trade. You're going to manual trade a lot of your stuff. Learn your system in and out. Understand why you're going short or why you're going long. Okay? Mike Valtos, I don't get paid for pushing his order flow. I wish I did, but I don't get paid for pushing his order flow print chart. And I don't know how many people have bought from him since I started my videos. I couldn't even estimate. Probably none. I don't know. But you know, when you load up a footprint chart, uncheck all of the variables inside those settings and load up a signal one by one. And once you load up that, then you go back on the chart, and if that is giving you what you want to see, okay. If I see ratios, I say, okay, I'm going to deal with the ratios. I'll leave ratio check, and then I'll go to the next one. Check the next one. Because as you can see, let's go up in here for a second. Let you guys into the back cave. As you can see, look at all of the variables he has. He has a buying and selling tail, delta divergence, exhaustion print, imbalance reversals, inverse volume imbalance. And some of the stuff I have checked, some of it I'm not using. Market weakness detector, order flow sequencing. He has several things that you would probably have no problem in picking out your signals and saying, okay, I want to see a combination of this particular signal, that particular signal, and boom, you're up and running. But you have to go back on your charts and do your work and see what signals you're satisfied with and if you can handle the risk tolerance. Because I'm telling you, some of these trades, man, they make you sweat. They chicken you hit. Like I said, I chickened out a couple of trades. I'm up some money. I'll chicken out in a minute. I have no problem chickening out with 2 or 3 points when I'm supposed to get 4 or 5 points. But in the long run, that catches up to you. Because if you don't take what you're supposed to take the way you originally set it up in your research, if you don't have it set up the way it's supposed to set up, if you don't trade the way you do in your research, you're going to run into problems. Okay? Here's another alert going off. I got a bullish recovery bar. And this is just some stuff that I'm testing, but I kind of like what I'm seeing. This was minus 546. The delta ended up closing at plus 198. And it's a trap trade. You got a ratio followed by a trap trade, but for me, it's not below this line right here. This is in the middle of the band. You can trade in the middle of the band, and like I said, my partner has an EMA running in the middle of his bands, and he uses Bollinger Bands. I don't like trading in the middle of the bands. I want to see extreme one way, extreme to the long side, or extreme to the short side. You almost got a not quite a pinch double bottom here, but you have a higher low. You got 15. The sellers will start. You see right here where the sellers are starting to peter off, and then when the bar comes back and almost gets there, it's only 4 sellers, and you got an exhaustion. You got an imbalance that followed that with exhaustion. Boom, to the upside. This is what I'm talking about. Where sometimes you have to just be looking at numbers. You're not always going to get your arrows, your buy and sell arrows, and you have to pay attention to the numbers. And right here I see it's plus 318, and then right here is minus 199, and then it jumps from 199 to 523. To me, Once it jumped up from one minus 199 to 523 in the imbalanced box, I might have taken a shot on that with the one lot. And as you can see, I would have hit my target because I would have only been asking for 12 or 15 ticks on that, risking 1-to-1, or just pull it down right below, pull that stop down right below that pivot. And then sometimes if you have to pull your stop down, count your ticks that you have to come down and kind of stretch that other target out there. Another video. But let's look at something. Let's look at a couple of more examples that I have here. Here's another trade. Another trade. And this doesn't happen every day. This is a long shot there load. It's 11:12 in the morning. As you can see down here, it's 11:12 in the morning. I got a ratio. All of the POCs are above the bar. Look at the delta. 3149 plus 3149, and the volume is 20,000. Can't remember what date this is on. I took this picture. It could have been on the 18th of October. And this is one of my first times seeing this. And I'm like, wow. The longs shot their load. That bar did not move up. It closed down. And then you got another ratio that followed it with the exhaustion. Bet the house. Bet the house. I got a note up here. POC formation, heavy top in action. I saw something recently online. I don't remember what. So many forums out here. I don't forgot what forum I was on. And there was a guy asking about the TAS indicators. TAS indicators. I look at the TAS indicators as nothing but the POCs, 3 POCs. You're going to get the same formation on the TAS indicators or on these POCs that you get on the TAS indicators. If you understand the thing about TAS, they start planking. You got heavy on the top, light on the bottom, heavy on the top, heavy on the bottom. Pay attention. If you're running 3 POCs on your order flow chart, go back and look at the TAS indicators YouTube videos. You'll have a lot more understanding of the formation of these POCs. This was I call it a shot to load. The longs have shot their load. And look how that chart just fell out of bed. It fell out of bed. And this was 11 o'clock in the morning, Eastern time. Eastern time. Okay? So that's one setup you guys could kind of like pay attention to. Here's another trade. Why did I make a copy of this? Oh, I just drew the trend lines. I drew the channels. You draw the channels. And here's a trade in the middle, because I think I drew them because you got a trap trade up here. I drew this line. This ratio, minus 482. Now, this was overbought. I'd have gotten stopped out, but look at what it did. It gave a trap. It gave exhaustion. And then the 394. So you kind of waited. And then it went from 394 to 759. It started to fall out of bed. That's another. I haven't programmed or I haven't set an alert for this kind of setup yet, but I'm in a process of setting up quite a few alerts. That's probably why I took this. And then when I drew my channels down, it hit the top of this channel, gave a ratio. Boom, short trade. This is the kind of stuff you see with order flow. And let me tell you, when you're trading order flow, there is no let me sit back and get a confirmation. Let me wait and see what it does. I have done that many a times. By the time you sit back and think about it, sometimes that trade is over. Over, said, and done. You see this trade, this ratio went off hitting this channel at 14.13 and 2.13. By 6 minutes later, it's making a bottom. It pulls back again right to the top of that channel and bangs again. You don't have a lot of time to think about these trades. Either you're going to do it after you see everything, and that's how fast your brain has to be calculating stuff. Do I want to pull this trade or not? So this is the kind of stuff I'm looking for. I am looking for overextended above the top band or extended below the bottom band. I will not pull a trade off in the middle because that's not my thing. I leave that to some of you other guys who like to, I just have, my success is my probability of success is just a little better when it's overextended or oversold or overbought. I think that's the same chart there. Let's see what else is going on here. Let's see what else is going on here. Trade I took yesterday. I got in right here. I got in because I was testing the below. Open below the POC, close below the POC. I was testing that. I got in at 26.5, and you can see I said recovery bar, double, below. Ratio came 2 bars later, and for a split second, I thought about adding another contract or two. And I said, nah, I'm going to just ride this down. And you see I got in at 26.5. I got out at 24.25. 9 ticks. Yeah, that's good. That's good money. Don't get me wrong. But I felt I left money on the table because when that ratio came, I got a ratio, I got below, so now it's telling me it's double topping here. It's double topping here and closing on the min. Then another ratio came behind that one with an imbalance box. And then a slingshot came behind that one. I just felt I made all kinds of mistakes on this trade. I'm going to try not to let it happen no more. Left too much money on the table. Got in with one contract at 26.5. Got out at 24.25. Okay. I'll accept that. Got out. You notice I put up here, got out early, chickened out. Yeah, I chickened out a little bit. This particular chart right here, yeah, this is basically a daily chart of the E-mini. And if it opens up like this, I know I'll only be taking short trades for the day. I don't care what you see on the long side. Practice your discipline in going in the direction of the market, and then you start taking counter trades as you get more advanced. I'm not that advanced yet. I can't handle it. So just give me the short trades. I'll leave the long trades out. When I see this bar is opening up like this in the morning time, okay, I already know I'm waiting for pullbacks. I already know I'm waiting for pullbacks. And what else we got here? Oh, I just consider this rollover time. You got a delta divergence right here. That's my first signal. Delta divergence right there. You got a trap trader right here, followed by ratio. Probably would have taken that trade. That's not a bad scalp. That's not a bad scalp. You would have hit at least a 10-tick target, getting in there, getting down to that's not a bad scalp. Then you come back up to this area, and then you get a ratio with exhaustion print right there. Not bad. Still above overbought, and you can see it just falls on down from there. That's a 10-point move right there. There ain't no chump change, ladies and gentlemen. No chump change by all means. So that's how I use the polarity bands. Strictly overbought, oversold. I will not pull off a trade in the middle. Even though right here, and this is real time right here, even though you see ratio right here, you see ratios going up, you see ratios going down, it's not extended enough for me. A lot of guys are asking questions. The main question, or the main thing that should be on your mind when you first look at a trade is look at your daily. Is the Dow going up for the day or down for the day? It's inside, I kid you not, I have harder days trading inside than outside. If it's an inside day, sometimes I even skip inside days. I will not trade an inside day at all. Polarity bands, that's how I use polarity bands. That's how I use polarity bands. This load shot right here, below the polarity band. The wave is a delayed, it's going to be lagging just a tad bit, but that's your signal. This is a 1 bar signal right there. This is the only trade, well, I will make a move the next bar. Trust me, you go back and look on your charts. You don't see that trade too often. But when they're shooting the load, the delta has to be going in the opposite direction of the closed bar. And I think I have it set at 1,000, so anything above 1,000, it's got my attention. This is at 1654. This was today, which is the 18th of November. Beautiful, beautiful trade. I think my partner took this trade right here. You have a double top up here. So something to be considered if you guys are interested in, and you got a ratio fall on it, which is again, nice trade. I just don't mess with middle of the road trades. And it's a short trade. So I think that's all the point I wanted to get across to you guys today. I don't put out videos too often, but I think I owed you guys a video. Like I said, check out my channel, The Baccarat Edge. Yes, I am a Baccarat player when I'm not sitting in front of the screen. And I'll talk to you guys in a little bit. Peace out.